to our platform where we get to let your data tell you a story, right? In today's episode, we are actually going to be looking at how to use an R library called Quantmod to retrieve data from Yahoo Finance and to get to analyze your data in R. And we're basically going to be looking at stocks that are listed on the Johannesburg Stock Exchange, and our examples will be based off the stocks in the financial services sector. As you can see on my screen, I have Standard Bank Group Limited, and the most important thing that we need to do right now, first of all, is to identify the ticker symbol that we are going to utilize in order for us to call the data into the R environment. So as you can see that we have a ticker symbol SBK.JO. So every stock that is listed on the JSE is going to be using the ticker symbol that has got an extension of .jo at the end. So be it exchange traded funds, exchange traded notes, or equity securities, all of them are actually going to be having a .jo at the end, right? And there's a lot of information that we can actually access from Yahoo Finance. As you can see, we can actually see the 52-week range, we can see the bid, the ask price, we can see the price to earnings ratios, the beta of the stock, and also we can also see the earnings per share and many other fields that can be put into R for analysis. But the one important tab that I want to show you is the historical data tab. So if you select historical data, what you'll see is that there's an option to download. So this option gives you access to downloading this file as a CSV file, and you can also change and customize the dates in terms of the time range in which you want to actually retrieve the data. So this is one option, but in our case, we want to utilize R. So our example is going to be based off R. Let's then go ahead and see how the R environment would look like. I've already set up my script and prepared myself for this presentation. And before we go deep into everything, what I want to touch on is, first of all, the areas that we are actually going to cover and what Quantmod is all about. So basically, Quantmod is a R library that a lot of people use for data retrieval, data manipulation, data visualization, and it actually does provide a very powerful option for your financial modeling or financial analysis, be it that you want to do technical analysis or you've got some form of data analysis that you want to do, right? So in our exercises today, what we're going to be doing is we're going to do an exercise for data retrieval. We're actually going to inspect the data. We're going to plot some charts, and we're also going to use the get code function and also calculate returns, right? And then the one most important thing that you need to understand is that you will need an internet connection in order for you to retrieve data from Yahoo Finance into the R environment. Okay, so let's get started. We are actually going to make sure that our environment can handle numbers properly. So I've set up an option that will allow me to do exactly that. And we are actually going to remove all objects that are currently on the workspace, and then we're going to install our Quantmod library. So in terms of installing the Quantmod library, there are two options. One option is to actually just run this line that says install.packages, and then you reference Quantmod. And then the other option is to actually utilize the packages tab, and then you select the option to install, and then it will pop up a box that looks like this, and then you will then type in Quantmod. There you go, you have Quantmod showing up, and then if you select Quantmod here and click install, the installation will happen. I'm not going to do this process because I already have Quantmod loaded on my environment. And then the next thing is for you to utilize the Quantmod library, you then need to actually call the library by saying library Quantmod. So let's just run this task and see what we get. So our environment is empty. There is no objects that we see. Now, the next thing is we would actually want to retrieve data from Yahoo Finance. But in order for us to do that, what we're going to do is to first create a vector, which is a vector that is containing a list of the securities that are listed on the JSE that we want to actually pull out. So we are interested in the financials, stocks that are in the financial services sector. So I've actually already gone and selected all of them here, and we are actually focusing on the banks, right? And then I've assigned an object for this vector to be called fin.stocks. And then I've gone ahead and also created another object, which is fin.stocks.prices, which is what we are going to utilize as the function that is going to call the symbols that we have already highlighted there from Yahoo Finance, and we have actually put in parameters that we are actually going to run this data from the 1st of January 1994. So we are going far backwards as possible, right? And then I've also created another vector where we're going to pull out data that's related to tech ETFs. So I've selected just a few that we actually have, and we have ETF 5IT, we've got SATRIX Nasdaq, and then we've got a SYGNIAFANG, and then we also have got SYGNIA4IR, right? And then we're actually going to also then do the similar step we did earlier on to say get symbols, and I've created an object that's going to do that, and we're referring to tech ETFs in this example. It will be tech.etfs, and then same time frame as we did with financial stocks. So let's go ahead and run this process so that we can see how it looks like. So as you can see, if you look at your top right, now we have data that has been pulled in. We've got ABSA, Capitec, we've got ETF 5IT, we have Firstrand, and all these other objects that have been brought in, and they came in as an XTS object, which is an extended time series object, which is a class or a format in which Quantmod normally formats this data into. And then instead of getting data starting from 1994, we actually got data only starting from year 2000, right? So we've got a couple of data sets that are for the year 2000, and then some of them, they vary in terms of the dates that are currently available. But obviously, this will depend on when the stock actually started trading, or when the ETF was launched and started trading on the JSE. Also, it could be that the only available data is actually as far as 2000 for like your stocks such as your ABSA, which we do know that they have been listed on the stock exchange for much longer than that. Right, and then the other thing that you see is that when I called the function to get symbols, we also got warning messages, and there was a warning that ETF 5IT and SATRIX Nasdaq and SYGNIA4IR. It seems like the warnings are for the ETFs, right? So some functions will not work if objects contain missing values in the middle of the series. So what this is telling us is that our data has missing values for our ETFs. What we can do is we can actually go ahead and inspect the data. In order to do this, what we can do is we can type in view, and then we say ETF 5IT, right? And then once you do that, you can then run the selected line. So you see our data now shows here. Now that we can see our data, we can actually scroll to look for areas where there's missing values. You can actually scroll through to look for areas where there is missing values. So you can see that on the 15th of May, there was a missing value, right? It could have been a public holiday. And then we also see that on the 18th of August, there was a missing value. It could have been a public holiday as well. So in order to handle these missing values, what we can do is we can then go ahead and actually say ETF 5IT, and then we say NA. We want to omit the missing values, right? NA.omit, and then we say ETF 5IT, right? So what this will do is okay, and then we'll do the same for the other one, which was SATRIX and DQ, and SATRIX and DQ, and then the other one is SYG4IR. SYG4IR. Okay. Right, but before we actually call out that function, what we're going to do is we're actually going to check again and select one date where we had a problem, right? So we see that we had a problem here on the 18th of August 2020. So now, in order for us to actually pick up that date that we had a problem, we can actually say ETF 5. We just want to subset that data, and then we say ETF 5IT, right? And then what we're going to do is we're going to select 2020 08, I think it was 18, and then that, right? And then we do this, and then we say 20. Okay. And then we say 2020 08. Let's take it to the 21st. Maybe let's make this one the 17th. Just confirm if we are actually looking exactly at the correct data. So now we will then, so now that we have ETF 5IT, then we can actually view the subset, because we just want to see whether is NAs and whether our replacement for, if we omit the NAs, okay, so we can see that our data on this day, we have just like subsetted the data. We had a problem here. So now let's go ahead and run our code. Okay. And then we go back here. And then let's see if, and then if we run this code again here, we shouldn't see the 18th anymore. Okay, see the 18th is gone, right? You don't have it here anymore. So that's how you handle NAs. You can use na.omit, and in order for you to inspect, you can subset if you don't want to scroll through the entire data frame. And then the one last part that we can look at is, in order for you to see the most recent, the first 5 rows of your data set, you can type in head, and then it will show you that our data started from the 4th of January 2020, and the columns that we have as shown here. So everything that we have here is numerical, and this is like your opening price, your highest price, your lowest price, your closing price, your volume, and your adjusted price. So your adjusted price is the price that actually takes into account adjustments that are related to stock splits, corporate actions, and dividends. This is the field that most people prefer to use as opposed to the close. And there are times when these values actually don't look the same. So say, for instance, if you look on the 4th of January, our closing price was 2,500 and our adjusted is 834, right? If you want to see the most recent prices, like the most recent 5 rows of your data, then you see that I ran, and my most recent price is at the 17th of July, and our data looks good. Our closing price and our adjusted price match. Okay, so our next step then is actually to go ahead and plot some charts. In order for us to plot charts, what we're going to do is we are going to leverage off a function from the library Quantmod, which is called chart series, right? So there's 2 options. There's chart underscore series, and then there's chart series. For now, let's just work from chart series. With chart series, you select your ticker symbol, and you can only plot one chart at one ticker at a time, right? And the theme is white, and then we haven't put in any technical analysis indicators here on this chart. It's going to be null, and then we are saying we want to plot for the last 7 months, right? We also want to add Bollinger Bands, and we also want to add RSI index, and then we also want to add simple moving average for a 200-day period. And then we also want to add a momentum indicator, right? So we're going to just run this code chunk, and then here we go. Our chart comes out now. So you see on our first chart, so we've got 5 charts. Why do we have 5 charts? We have 5 charts because we selected the first option to plot the chart, and then the second option was to add Bollinger Bands. And then the last option was the momentum. So the last chart will actually show all the 5 elements in the chart, but the first chart only shows the first instruction that we gave, right? So as you can see, this is ABSA. The chart for ABSA is very interesting. The red line is the 200-day moving average. If we are not happy with the red that we see and we want to change it, what we can actually do is we can actually then come here and change it to say col equals a red. I mean, we already have red, so let's make it green. So all you do is that, and then you say green, right? If you run this code chunk again, you should be able to see the green line, right? Okay, so there we have it. Now our 200-day moving average is green. And we can see that the ABSA share price is actually trading below the 200-day moving average, and our Bollinger Bands are showing. The relative strength index is downward sloping, so we actually have moved away from the overbought levels which we are around about in June, and our momentum is negative, right? So definitely something going on with ABSA here. We can also just have a look at another ticker within the banking sector. Let's see what other guys are doing. So let's have a look at Capitec. So we will just have to change here and say CPI, and then everything else remains the same, and it's for the same period. You'll see that this is the chart for Capitec, and Capitec is trading way above the 200-day moving average, and our Bollinger Bands are there. The relative strength index is quite on the elevated side compared to what we saw with ABSA, but the momentum is falling. So definitely correction could be happening with financials. But the difference is that Capitec is trading above the 200-day moving average. Let's have a look at one more before we leave the financials. You could actually do this again by changing here, and let's have a look at Nedbank. So you just change to Ned and then run the code chunk again. So there's so many technical indicators that you can utilize here. I just chose these ones, but there's so many that you can utilize. So you can literally customize your code into what you really want to do with your technical indicators. That's the beauty of it. So you can see also that Nedbank is also trading above the 200-day moving average, right? So change. If you wanted to see a 50-day moving average, you could just come here and change n equals to 50, and then maybe let's remove the momentum indicator and add MACD, right? So one thing to note is that if you use chart series, you add technical analysis indicators that don't have an underscore. If you use the option, let me just show you here. If you use the option chart underscore series, this option, then you are also going to add underscore. So these two, they go hand in hand. You cannot plot chart series without an underscore and then add technical indicator with an underscore. It's not going to work. It's going to throw an error. So just take note of that. So let's go back to our scenario. So we've added a moving average, convergence, divergence indicator. So let's see how Nedbank looks like after we plot our chart. So there we go. We have it with Nedbank. As you can see, our MACD graph is showing here. And that's how you get to utilize the Quantmod library to plot technical charts. There's a lot of charts that you can do. I just said I want to see for the last 6 months. You could actually do it for the last, maybe let's change and say you can actually also subset by saying 2024. So we just want to see for this year only. It should still give you the relevant data. So it's up to you. It's a preference how you want to approach it, but definitely you see our data starts from January for the last 6 months and looks good. So yeah, let's also see, maybe have a look at the tech ETFs that we called, and we had ETF 5IT. This ETF obviously doing very well at the moment because tech has been having a solid bullish trend. And as you can see, this is also trading above the 200-day moving average, and it actually cut the 200-day moving average sometime in May to give a bullish signal. And relative strength index, not in the overbought levels. This is how you view it, and definitely quite interesting. Right, and then let's move on from these charts and look at other things. So what you can also do, you can also leverage off the get quote function. So with the get quote function, you can get a quotation of whatever is happening in the market during the intraday trading session, right? Let's say you do not want to browse your Yahoo Finance website. All you do is you can actually get a code for ETF 5 it.jo, right? And then let's just run this line and see what comes out. So once you run your code, you can see that we got our code here. So what did we get? We got maybe let me just leave it like this. Looks better visually here. So we got our last price at which ETF 5IT actually traded, and we got the price change. So it last traded at 1649 when the markets closed, and it actually lost 1.585% on the 18th, which is the day I'm running this code. So in order for you to verify that, what you can do is you can actually come and say ETF 5IT, and then we get our symbol here, and we can see that the last price was 2857 and it lost 1.58%, which is actually consistent with what we see when we did our quotation. So we got a code for this information. But the code function actually has got a lot more that you can actually do with it. And one of the functions that I like with the code function is actually the Yahoo QF, right? So with this function, what you can do is you can actually select Yahoo QF, and then we just want to quickly run this line, and we're actually going to then get to see the options that are available for us. So as you can see here, you can actually select almost 86 fields from Yahoo Finance that you can use. Either you want to construct a dashboard, or you want to analyze a few fields, but browsing on the internet just takes quite some time for you to aggregate the information. This is amazing. So say, for instance, you only want to get a few fundamental ratios like your PE ratios, your earnings estimates. You can actually easily do that. And you can actually then go ahead and run your code that you would have actually set up in order for you to actually run that query. So what we're actually going to do today is perhaps maybe select a few fields and not take everything, right? Okay, let's go back to our code. Let's see. Right, so here we are. So we want to run this query. So what we can do is we can assign a query, and then in this query we are going to leverage off the function Yahoo QF, right? So with Yahoo QF, you can then call any particular field that you are interested in. In our case, we are interested in the symbol, the name, the market cap, the PE ratio, the price to book, dividend yield, current earnings per share forward, as well as the analyst ratings, right? And also we will then just go ahead and use the get code function, similar to what we did last time. The only difference is that we're going to actually get code based on the vector that we created earlier on, which is a list of financial stocks that are in the banking sector. And what are we getting? We're getting everything that is in the query, right? If we run this code chunk, it should be able to get us. Okay, so there is a problem here. I just need to fix that and go back to my code chunk. So as you can see that we ran the code chunk, right? And here's our data. We managed to pull out our market cap, and obviously this code is based on the date that the last trading time, right? So you can see that we have our market cap field showing, we have got the PE ratio, price to book, dividend yield as we intended, and also we've got the average analyst ratings, right? And you can see that Capitec seems to be the most expensive stock from a PE ratio point of view. It's trading at a higher multiple compared to its peer group. And ABSA, for some reason, it's trading at the lowest multiple. It's quite cheap compared to its peers. Similarly, at a price to book level, ABSA is consistent, it's cheaper as well. Capitec is quite elevated, but we do have Investec being expensive at a price to book multiple, right? And then dividend yield, you can see that it seems like we're getting the most dividend yield from ABSA as well. So it's a low PE stock and high yield dividend yield stock compared to its peers. And then earnings per share, if we have earnings per share for the current year and what the analysts are forecasting for the future, then we can actually calculate earnings per share growth rate based on these values. And we can see that the analysts believe that these stocks are having all a buy rating, and Capitec is the only one that the analysts are rating as a hold, not a buy. So there you have it. So you might want to leverage off this powerful function, Yahoo QF, to pull out some of the most important information and analyze things fast and with a bit of some speed, right? We can also apply the similar logic to our ETFs. But now what you have to bear in mind that you won't get any fundamental data for your ETFs, like your market caps, PE ratios. ETFs don't have that kind of information. But what I've done is I've selected a few fields that can make this example more meaningful to us. So I'm wanting to have a look at how these ETFs differ in terms of the percentage change from the 50-day moving average and the percentage change from the 200-day moving average. The price to book ratio doesn't really need to feature here, so I'm actually going to take it out. And then a 52-week range and the first trading date, so that we can see when these ETFs were launched, right? And then we are going to call our function get code from Quantmod. And what are we getting? It's based on the query that we've just done right now. And let's run that code chunk and see what comes out. So there you have it, the symbols, and we have the names of our ETFs. And let's just go ahead and show the kind of data we got. So we can see that, okay, so most of them started trading in 2018, and the most recent edition was September last year, which is the SYGNIA actively managed FANG ETF that was launched in 2023. So you kind of like have an idea when it actually started trading. And we will notice that percentage change away from the 50-day moving average. The highest percentage change from a 50-day is on the 4IR SYGNIA ETF, and for the 200-day moving average, we have the ETF 5IT and Nasdaq, as well as actually ETF 5IT and the FANG. They have got the same percentage, almost close, very closely matching each other in terms of percentage change from the moving average. And we actually have got the 52-week range as well, so which is the lowest and the highest price that they have traded in the past 52 weeks. Yeah, so there you have it with what you can do with the creating a query and leveraging of the Yahoo QF function from Quantmod. And then the last part of the last two sections of our exercise today, I'm just going to quickly show you how we can do period returns. I just had to subset our data a little bit so that we can just have a look at a shorter time frame. So starting from 2023 December 29, if you want to calculate year to date, this is what you do. Period return is the function that we're calling from Quantmod, and the period is on a monthly basis. So I'm just going to change it to yearly so that we can get year to date return, and then you click run. So you see, as of yesterday, the 17th, it was 0.667 period return. So this is how you do your period returns, or if you want daily returns, you can change here and then actually change, and you will get your daily returns. If you wanted to calculate log returns, then you can just type here. So this is like with continuous compounding, then you say type equals log, and then you can then click select, and then there you have it. Your returns will show as log. The last part of our example is actually going to show you how to call a help function when you're looking for any help related to any Quantmod function. So let's say, for instance, you want to add a simple moving average, right? So you're going to say add SMA, and then if you click select here, let's just click run there, and then our help option will pop out on the bottom right here. So you can see how they show you how to use the add SMA function. So you can choose n is equals to 10. That will be a 10-day moving average. It means you want to show it on the same chart, and when you plot the chart, and everything else, these fields and everything is explained here on how to use the add SMA. So you can do it for any function that we're using. So for instance, today we leveraged of period return just now. So you can actually run how to do period return, and then your help will show under here calculate period returns, and then it will show you can do daily, weekly, monthly, quarterly. All these returns are an option that you can utilize, and you can actually then see there's examples of as well on how to do it. So that does it for this episode. Thank you very much for tuning in. If you like the content that I'm making, make sure that you like, you comment, and subscribe to our channel. We will welcome any input that you have, anything that you have in mind. Give us your thoughts. Remember, this is the platform where we make your data tell a story. Until next time, thank you.